What if everything you've been told about investing is either incomplete or just wrong? Not opinions, not theories, just 5 real facts that can completely change how your money grows. Because the truth is, most people don't fail at investing because they're not smart. They fail because they follow advice that sounds good but doesn't actually work in real life. Investing today looks overwhelming. Charts moving every second, experts predicting crashes, people flexing profits online. So what happens? Most people either jump in without understanding anything, overthink every decision, or avoid investing completely. And all three lead to the same result: missed opportunities. But here's the reality. Investing isn't about being a genius. It's about understanding a few core principles that quietly do all the heavy lifting. Let's break them down. Fact number 1. Timing the market matters less than you think. A lot of people believe success comes from buying at the perfect moment, waiting for the dip, predicting the crash, catching the bottom. Sounds smart, but in practice, almost no one does it consistently. There's a much simpler approach: investing the same amount of money regularly, no matter what the market is doing. When prices are high, you buy less. When prices are low, you buy more. Over time, this evens everything out. No stress, no guessing, no emotional decisions. And ironically, this boring method often beats people who try to outsmart the market. Fact number 2. Most of the returns come from very few investments. This is where things get interesting. In the stock market, a small percentage of companies generate the majority of the gains. That means you don't need to pick winners every time. You just need to not miss the big ones. And this changes how you think, because instead of trying to be perfect, the real goal becomes staying in the game long enough to catch those rare, high-performing assets. Missing them can hurt more than making a few bad investments. Fact number 3. Compounding looks slow until it suddenly isn't. At the beginning, investing feels almost pointless. You check your portfolio and see small gains, maybe even losses. It doesn't feel like progress. And that's why most people quit too early. But here's what they don't realize. Compounding is not linear, it's exponential. Your money starts generating returns, and then those returns start generating their own returns. Year after year, it builds. At first, it's invisible. Then it's noticeable. Then it becomes powerful. The biggest mistake? Stopping before it kicks in. Fact number 4. Most investors underperform the market. This might sound surprising, but it's true. Even professionals often fail to beat the average market return over the long term. Not because they lack knowledge, but because they overcomplicate things. They try to predict short-term movements. They react to news. They chase trends. And emotions get in the way. Fear makes people sell too early. Greed makes them buy too late. The irony is, simple, consistent strategies often outperform complex ones over time. Fact number 5. Not investing is the biggest risk of all. A lot of people avoid investing because they're afraid of losing money, and on the surface that makes sense. But there's a hidden risk most people ignore: inflation. Even if your money just sits in a bank account, its purchasing power slowly decreases over time. So while it looks like you're not losing anything, you actually are, just more quietly. Investing isn't risk-free, but doing nothing isn't safe either. At the end of the day, investing isn't about luck. It's not about finding the perfect stock or predicting the next big trend. It's about understanding how money grows and putting yourself in a position to benefit from it. Most people never take the time to learn this. Now you have. If at least one of these facts changed the way you think about investing, make sure to like the video. And in the comments, which fact surprised you the most? Subscribe for more content that actually helps you build real wealth, not just chase hype.
You can stand under my umbrella.